right here in Zambia. Join our live beginner-friendly online classes. Participation fee only 750 kwacha per session. Investing in Zambian stocks every Friday morning from 09 hours to 12 hours. Learn how to buy and sell shares of the Lusaka Securities Exchange, LuSE. Analyze companies and make smart investment decisions. Government bonds every Saturday from 18 hours to 21 hours. Understand how to invest in government bonds, earn stable returns, and build long-term wealth. Each 3-hour session is packed with practical strategies, expert insights, and live Q&A to help you invest with confidence. Register and pay online at www.insightpartnersafrica.com or send your payment via Airtel Money to 0977 445 604.
That's right. Just loving this, like I mentioned earlier, that we are back on this very important program right here on Ndalama Insight, back and giving you more and more information on what you should expect. My name is Chilufya on this special program, and of course, we are focused on shares versus GRZ bonds or government Republic of Zambia bonds, okay, which is more profitable, by the way, for that money that you have, okay, whether it's a 10,000, 20,000, 15, okay, and of course, Inside Partners Africa, Mukonki Mukonkela, she's here as usual to just give us more. And today we'll focus on the question that we received, a very interesting, a question that we received from, one of our listeners right here. Okay, it's a situation where somebody has money and they're asking themselves to say, where do I invest? Okay, where do I make more profit? If I have this 10,000 or whatever money that I've put in place, okay, where do I invest and make more profit? Shares or GRZ bonds. So that's what we have this morning, and of course, Mukonki, good to have you on the program.
Good morning, Chilufya. It's great to be here.
Oh yeah,
yeah.
And good morning to all those that are locking in right now. Others, I'm sure they're live on Facebook.
Yes, others are live on YouTube.
Mm-hmm.
There's quite a number today.
Nice. Nice.
So we need to give them something valuable.
Very good. Very, very.
Yeah.
Yeah, they are waiting. They're very expectant, right?
Yeah.
Okay. Yeah. So where Mukonki, those questions will always be there.
In fact, this question, Chilufya, is a very common question, and I believe we've actually discussed it in the past.
Oh, yes.
People really want to know, if I have 10,000 kwacha, where should I put my money? Should I buy shares or should I buy bonds? So today I thought it would be interesting for us to compare the GRZ bond, a 5-year GRZ bond, with making an investment in Copperbelt Energy shares. Now, even as I start, I would like to tell you that we're actually comparing apples to oranges because the two are not similar.
No.
They've got different characteristics, they've got different goals. So even as I start comparing the 5-year bond to Copperbelt Energy shares, which I hope that you can hold for 5 years so that we can create a common denominator so that we're able to actually carry out a comparison, we need to understand that shares and bonds are different assets. In fact, they're in different asset classes. So let me explain a little bit more, Chilufya. The shares, when you buy a share, you are buying a part of a company. And when you buy a part of a company, you become a shareholder, you become a part owner. So your returns in terms of how you make money come mainly in two parts. If the company is a dividend paying company, they will pay you an annual dividend. Normally, they pay 2 dividends in Zambia. We receive an interim dividend, which is before the publication of the annual financial reports, and then you receive a final dividend. If you are fortunate, so this is not guaranteed. This is the decision that the directors make in a company to pay the dividends. So if it's a dividend paying company, that is what you receive. And then you also receive capital appreciation on the share price. So if you bought Copperbelt Energy, by the way, it's actually doing really well. Just a couple of weeks ago, it was around 13 point something. Now, yesterday when I checked, it was 15 kwacha. So if you bought Copperbelt Energy, let's assume there are people that have been very lucky. They bought it at 7 kwacha or even, I think, 4 kwacha. Somebody told me 4 kwacha. Now it's selling at 15 kwacha. The difference is the capital appreciation. That's the profit that you are making. So in shares, those are the returns. That is how you make the profit. And then when you look at the risk profile of shares carry more risk compared to bonds. This is because remember, your returns are tied into the performance of the company. It's when the company is profitable and is doing well that you're able to earn these returns. Now let's look at the bonds. With the bonds, you're lending money to the government. It's a loan, so the government is borrowing from you. And when the government borrows from you, that's the GRZ bond, they promise to pay you back interest, which we call coupon. So every 6 months, you get a fixed coupon income. Now, if you're comparing with the shares, the dividend is not fixed. So the coupon, the dividend yield, which is like the interest that you make on the money that you've invested in a company, it is not fixed. It is dependent on the performance of the company and what the directors declare. Very important to remember this, which is why I'm saying we're comparing apples to oranges. But when it comes to the bonds have got a fixed coupon rate. So once you buy a bond and it's saying that your coupon rate will be 19% for 5 years, it will remain fixed at 19% for 5 years until the bond matures. But with the shares, you can get 7%, you can get 9%, you can get 20%. It depends on the performance of the company. So very important to understand this. And when it comes to bonds, that is why we actually say bonds are a secure investment. They are normally for capital preservation, because even the 10,000 that you're going to invest in the government bond, at the end when the bond matures, you get back the 10,000 kwacha. Unlike, of course, especially if it's on the primary market, unlike the shares, with the shares, you could have invested 10,000 kwacha. After 5 years, it could have grown to a larger number. So even as we are starting to make comparisons, please understand that we are comparing apples to oranges. But because I understand we humans are very, we want to know, I've got 10,000, should I buy the bond or should I buy the shares? I should state that it's all up to you, considering the factors that we've discussed.
Okay.
Consider your risk appetite. If you've got a moderate to high risk appetite, shares are good for you. If you are younger, shares are very good for you. If you are nearing retirement, you want to preserve your capital, bonds become much more attractive. All right. So having established this, please don't go and tell me Mukonki was able to compare shares and bonds. We cannot do that. But we will try to create a common denominator. And to create a common denominator, I'm going to assume that you're going to buy Copperbelt Energy shares and you're going to keep these shares for 5 years. And then you're also looking at buying a 5-year GRZ bond. So that is a little bit of commonality that I'm trying to establish as I make this comparison.
Oh, nice. Okay, so let's make it a bit practical here.
Yeah.
Let's say somebody invests 10,000 kwacha today.
Yes.
Let's talk about the returns. How would they look like in the next 5 years? Let's put a figure of 10,000 kwacha.
Yes. So let's look at 10,000. So we look at the bonds and then we'll look at Copperbelt Energy shares.
Okay.
So with the bonds, if you bought a 5-year bond, assuming, if you look at the previous month's results, assuming the 5-year bond is giving you a coupon rate of 19%, and we're also assuming that you're actually reinvesting this money, there's a formula for compounding that you can use. So 10,000, if you compound it for 5 years, it will give you around 24,030 kwacha. Okay, so we are compounding and we are assuming that you are reinvesting the coupon incomes that you are making. So if you look at the difference between 24,030 minus 10,000, you've made a profit of 14,030 on a 5-year bond. Now let's compare this to Copperbelt Energy shares. Assuming you bought Copperbelt Energy shares. Now, if you go to a website, I think it's an American company. There you are going to find that Copperbelt Energy showing, there's an assumption that Copperbelt Energy has a 1-year annual return of 94.7%, which is quite good.
Okay.
But then I'm going to assume that this is quite high. So we'll lower it to a moderate annual return of 20%. So assuming that the share price or the returns are increasing by 20%, so your share price rather, so assuming that the share price, the price that you buy Copperbelt Energy for is increasing by 20% every year, and then every year Copperbelt Energy pays you 16.5% in dividends, it means that from your 10,000 kwacha, you can make 32,500 32,405 kwacha. That is 32,405 kwacha. The difference between the 10,000, the 32,000 and the 10,000 gives you 22,405 kwacha. So if you compare the two side by side, you find the GRZ bond is giving you 14,000. Copperbelt Energy shares will give you 22,000. Now, this is even after I've lowered the the return from 94% to 20%. So if we had used 94%, it could have even been higher. So already we can see that shares seem to be much more profitable than the 5-year bond, but particularly this company, Copperbelt Energy, that I'm comparing. Now, if it was another company, it could have been lower, or if it was perhaps Airtel, which pays much more dividends, it could have been higher than the 32 that we're seeing for Copperbelt Energy. So it also depends on the company that you're investing in.
Oh, nice.
Yeah.
So what else can they consider as well in the process?
So extra factors to consider other than the return. So as you are making a decision where to put your money, I think let's establish that the key fundamental point is the return that you're going to make over a period of time. So you need to create some commonality and look at a period. So 5 years is a good starting point, and then compare the way we've done it. But other things you need to consider is the risk. First of all, what is your risk appetite? If you've got a huge risk appetite or risk profile, and risk can basically be broken down into conservative, moderate, or aggressive. So if you are between moderate to aggressive, you can consider investing in shares, because over the long term, shares will give you more return. That's why they say the more risk, the higher the return, and shares carry more risks than bonds. So if your appetite is high when it comes to risk, you can always buy the shares. But if you need to preserve your money, you don't want to lose your money at all, because when you buy shares, you can actually lose all your money. If a company goes bankrupt, liquidated, you find that you are unable to recoup or recover the money that you had invested. So the risk in shares is pretty high compared to the bonds. So if you are afraid of losing that money, keep it in the bonds. The returns are also pretty good. We're talking about 19% for a 5-year bond. And then the stability in terms of income. Another fundamental factor to consider is how frequently do you want this income? When it comes to the bonds, you get biannual, like every 6 months you get a coupon income. So you basically get 2 coupon incomes in a year. And if you've done a really good job, you can ladder these bond coupon incomes. You can invest such that you're able to get a coupon income every month. As long as you've got 6 consecutive investments, you're able to get a coupon income every month, creating more like a salary for yourself from the bonds. But with shares, you get a dividend dependent on the decisions made by the company. So it's not guaranteed, but it is something that you could also work through. If you're able to find companies that pay dividends in particular months, you can even consider international markets as well as part of your portfolio, so that you also create some kind of regularity when it comes to income. But in Zambia, in terms of regular income, the GRZ bonds give us that assurance. And then the third one, Manchilu, is the liquidity. If you look at how quickly you can sell these assets, the shares are a little bit more liquid than the bonds. It's because the market for the bonds is not as quick as the shares. So when if your aim is to liquidate quickly, the shares are a better option than the bonds. Of course, you can also sell your bonds, but it's about how quickly you can turn over or sell these. So these are extra factors that you need to consider as well.
And they've been very helpful. Very helpful. You've explained them very well. In closing, what would you want people to know, in case you left out something, as they decide on where to place their money?
I would like to close by saying I gave an example of Copperbelt Energy, not that you should go and put your money there. Okay. It's just an example. I could have used Airtel, I could have used Chilanga Cement. I just use the example. So please do further research on all the companies before you put your money anywhere. And if you would like to know how to analyze and assess companies, you can join me on a training every Friday morning. I do investing in shares, try to demystify investing in shares. And then every Saturday we look at investing in GRZ bonds and how you can buy your first GRZ bond. So if you would like to join any one of my classes, it's the easiest way to register is online. I don't know why people like to make phone calls. Just go to Inside Partners website. You will find the course fully described. You even find like a link that will take you to a payment platform where you even put in your payment details. And once you pay, I will call you. You don't even need to call me.
Oh yeah, easy, yeah.
I will call you and we set up the class. So it's easy, it's as easy as that. But for those that love to call, you can always call me on 0977 44 56 04. 0977 44 56 04. And also let me add, last week I mentioned our WhatsApp group. Actually, it's full. We have crossed over 1,000. I think WhatsApp has got a limit on the members you can have. We've got over 1,000. But I've created a Telegram group. That is a new group that we need to build now. So if you are interested in joining the Smart Investors Inner Cycle, you can join the Telegram group. I think Telegram gives us a wider scope in terms of the membership. We can have over 200,000. So you're welcome. Join me. We'll try to make it as user-friendly as possible. This is where we support each other. It's not just me talking. Even you can support each other in the group. That's the essence of that group.
Oh, nice.
Yeah.
Maybe I'll allow you to just run through on how they can join the online again. Just go through.
So to join my workshops or courses, and if you want to get personalized advice, things, I need to buy out time to sit down with you. So there's a cost, unfortunately. And to join the course, you go to the website, insidepartnersafrica.com. You'll find a full description of the course and what we cover. There's even a platform where you can make a payment. We use the DPO payment gateway. It's very safe and secure. So you just go there, make your payment. And once you pay, we'll receive the details and we'll contact you. Otherwise, you can also pay through Airtel Money using my number. And we'll also get back in touch with you. So that is how you register for the courses, or if you want personalized one-to-one advice.
Okay. Did you just say using your number?
So my number is 0977 44 56 04. 0977 44 56 04. Please call with a very important question. No, I really don't have so much time.
I know, right?
Because you know what? You know why I say this? Most of the questions that I get, you can actually watch my YouTube videos. There's over 100 and I don't know what YouTube videos, and you'll find all the answers there. And if you're not ready to spend some money in training, you can sit and watch the videos and teach yourself many of the things that you're going to learn. However, if you want a quick access to me, you follow the procedure as I've described.
Oh, nice. Yeah, we really appreciate you, Mukonki, as you try to just change people's mindsets. Right? Investing is about the mindset,
Yeah. In fact, sorry, Chilufya, maybe as you're talking about mindset, I need to just add, yes, your mindset, you need to prepare your mindset. And there's so many things that we are in our minds that are very wrong. And we need to start. In fact, you cannot invest with a bad attitude or with a bad mindset and cultivate it. For you farmers, first start by getting the weeds.
Yes. Weed out.
Weed out every bad thing that you've been thinking about before you can plant that seed, because that seed will never grow with you're a farmer, Chilufya.
Yeah. You don't need weeds nearby.
They'll mess up your seed.
Exactly. Mukonki, thank you very much for coming through, and we'll be looking forward. And I know the nation's, is always appreciating whenever you come on board. We wish you all the best as well.
Thank you. Thank you so much.
All right. Thank you very much. There you have it. That was Mukonki there. Okay. Make sure you invest wisely and follow exactly what she has said. She's been good. She's explained things, and she's made it practical for us this morning in her explanation. So join her next